The top CD in 2024 pays 9%. What's the catch, and do you qualify? Hello, members, super savers, and bond course folks. I hope you're healthy and well. It's been a while since we've done a top CD of the month video, but this 9% CD offer that one of you sent our way was so eye-catching that we felt it necessary to share the news for the benefit of those of you who might be able to take advantage of this opportunity, especially in light of the recent discussions about upcoming rate cuts. Here's what we'll be covering in today's CD update video. 1. Who qualifies for this 9% CD offer, and what are the restrictions? 2. If you don't qualify, what are some of the best 3-month to 60-month CD rates you can get from the top online banks currently? And 3. Are CD rates currently better than Treasuries, and what other factors should you consider? As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. First, many thanks to our YouTube Super Saver member LNC for sharing this 9% CD offer with the community this past weekend. Express Credit Union in Washington State is celebrating their 90th anniversary year with a special 12-month CD rate. Through December 9th of this year, on the 9th of each month, when you open a new CD, they will pay you 9% APY on balances up to $5,000. That means you could earn $450 in 12 months just by opening the CD at 9%. And yes, you must open the CD on the 9th day of the month with new funds, meaning money transferred from sources outside Express Credit Union. They've also clearly gotten a lot of questions on this because here we have in caps, you must live or work in Washington State to be eligible for membership to establish an account and open the promotional CD. There is also a minimum opening balance of $200, and your funds are insured by the NCUA up to their standard coverage limit of $250,000. So, if we scroll down further on this page, which I've linked below for you, here are the instructions for opening this 9% 12-month CD if you're an existing member or if you want to become a new member. You can fill out the membership application online. And if this offer will actually remain available until December 9th, as they promise, you could even keep doing whatever it is you're currently doing with your money, whether that's with CDs, T-bills, or money market funds, and wait until December 9th to open this CD. That way, you could maximize the high short-term rates we have now and still take advantage of this high rate if and when the Fed may be starting to lower rates later this year. This is really the best CD rate we've seen in a long time. So even if you can't take advantage of it because you don't live or work in Washington State, do share this video with family, friends, and colleagues who do. Maybe they'll get you a Christmas gift with some of that 9% interest they'll be earning on their money. Let's move on now to the next section of this video to see what some of the best 3-month to 60-month CD rates look like currently if you're not able to take advantage of Express Credit Union's 9% promotional CD offer. So, the CD rates that I'm about to share with you are from some of the places that our members, super savers, and bond course folks most commonly bank with. All of the CDs on the list are FDIC insured. Remember that the standard FDIC threshold is $250,000 per depositor per insured bank for each account ownership category. So, here's what the rest of the CD market looks like currently. This column shows the company name. This column shows the minimum balance requirement. And these columns here are the CD terms that typically interest our Diamond NestEgg regulars the most. Do note that we sorted this table alphabetically by company name because no single company here offers the best rates across the entire maturity spectrum. Here's what the CD rates look like with BMO Alto. NA here and here means that BMO does not offer CDs with these terms. At the current time, BMO has the highest rates for the longer end CD maturities from the companies on this list. Here's what the CD rates look like with Bread Savings. Bread has the highest minimum balance requirement on this list, but the best 24-month CD rate. In the next row, we have Capital One. We kept Capital One on the list because I know quite a few of you in our community have CDs and other funds with them. But their latest CD rates are not the most competitive, as you can see here. Here's what the CD rates look like with Marcus. Their sweet spot seems to be here. Marcus also has a 6-year CD for those of you who are looking to go out even longer. At the time of this taping, here's what the rate looks like on that 6-year CD. And last but not least, we have Synchrony, which seems to be the least competitive on this list across all maturities. Synchrony is, however, running a 13-month CD offer at a 5.15 APY that's not shown on this list, given that somewhat odd maturity, but may be worth checking out if it sparks your interest. So now that you know what some of the best 3-month to 60-month CD rates look like at the time of this taping at places where Diamond NestEgg community generally bank with, let's move on to the next section of this video. Those of you who've seen our latest weekly update video linked below know that last week was not a great week for bond yields. And if we go back to the CD rate comparison table and add in this row for Treasuries, we can see that Treasury rates across a number of maturities are now below CD rates, and in some cases, a fair bit below. Please remember, though, that this table is also a snapshot at the time of this taping, and that the rates may change, so please do check and reconfirm before you invest. But if you've been building out your bond ladder or are thinking of doing so right now, it may make sense to see what comparable maturity CDs are paying, especially on the longer end, given what's currently happening in the bond market. And of course, don't forget about brokered CDs. Brokered CD offerings change regularly as well, and you may at certain times find brokered CDs with higher rates on Fidelity, Schwab, Vanguard, and other leading brokers than what is listed here. Having said all this, do keep in mind that depending on your circumstances, a somewhat lower Treasury rate may still work out better for you than a CD because interest earned on CDs is fully taxable when purchased in a normal taxable account, whereas interest earned on Treasuries is exempt from state and local income taxes. If you need a bit of help comparing CD versus Treasury rates, then check out this video here, also linked below, on how to use Fidelity's tax equivalent calculator in order to do this. All right, members, super savers, and bond course fans, I hope you enjoyed this video and learned something new. And if you want to keep learning about the safest, easiest, and fastest ways to get started with bond investing, then check out this video here on our 2024 bond courses. Or come join our next live member Q&A on August 21st at 6 p.m. Eastern Time, 3 p.m. Pacific Time to continue the discussions further on all things fixed income. I've also linked all the details on our bond courses and YouTube Super Saver membership below this video for your convenience. See you again very soon with more brand new wealth building content for your financial journey.